where are you today as a real estate investor? What does your portfolio look like?
We have a total of 15 apartment buildings, some mixed use, 6 commercial spaces in those buildings, and then we have another building we're closing on shortly, all firmed up, that would add 2 more to that, plus another 7 apartments.
Oh, nice.
Yeah.
So now what you're kind of looking into going into is kind of like shopping malls, office buildings, retail plazas, really kind of looking at moving or transitioning from kind of residential or residential commercial mix into these like bigger projects and properties, right?
Exactly. Well, it's a bigger risk and a bigger reward. When people say, oh, it's risky, yeah, if you take all your cash and you put it in one building and the building doesn't lease, that's a big problem.
Yes.
You shouldn't do that.
So where do you go to find these deals? Every real estate investor, regardless of whether they're brand new to the game or a seasoned veteran, they all at some point in time are going to aspire to own a bigger investment, like a shopping mall, a retail plaza, or even an office building. In today's video, we sit down with Jon Kepler and discuss his progression and evolution as a real estate investor and what he's looking for in his next type of investment. He started looking at buying into shopping malls, retail plazas, and those office buildings. I think this is really fascinating. I don't have a lot of experience in this realm, but I really appreciate Jon sitting down and breaking down some of the basics that we need to be aware of if we're going to move into this category of property. What is up, YouTube? Matt McKeever here again with Jon Kepler, and today we're going to be talking about how do you move or transition into a new business model or building profile. So before we get into kind of what you're about to transition into as an investor, Jon, do you mind breaking down for the audience, where are you today as a real estate investor? What does your portfolio look like?
So we have primarily multifamily properties. They sometimes have a commercial component, so there will be mixed-use buildings that have both apartments and storefronts in them, either a retail type storefront or an office storefront. I thought that I would build into larger buildings, maybe more commercial buildings a little bit more quickly than we have, but at the end of the day, it's nice to create a solid base where you have dependable, reliable multifamily where the market has done very well, and then you get to take more commercial risk with more commercial reward as you scale up and you can afford to work with the risk profile. So right now today we have a total of 15 apartment buildings, some mixed use, 6 commercial spaces in those buildings, and then we have another building we're closing on shortly, all firmed up, that would add 2 more to that, plus another 7 apartments.
Oh, nice.
Yeah.
So now what you're kind of looking into going into is kind of like shopping malls, office buildings, retail plazas, really kind of looking at moving or transitioning from kind of residential or residential commercial mix into these like bigger projects and properties, right?
Exactly. Well, it's a bigger risk and a bigger reward, and you have, again, as I said, you have more options when you have a solid base, right? So when you have cash flow coming in and you have a business model that's working, you're able to reach up and do that one extra thing.
Yeah, so I know a lot of investors ask themselves, when do you know it's time to like move on or to start experimenting or exploring other business models? You know, did you set certain goals or metrics that you want to hit before you would move into the next project, or is it more as opportunities present themselves? You know, how does someone approach a growing portfolio?
Well, I hope this advice isn't too simple, but some of it just comes down to being open-minded. So understand that your business has a trajectory to it, and you're going to make changes, improvements over time, and then just review the opportunities as they come in. So we've been reviewing, one deal we reviewed was an office-only flip, so flip without a residential component at all, but you go in, you lease, you just go in, make minor improvements, do a lease up. If there are owners in place who maybe haven't run the building effectively or are looking to exit the business, they're not really trying to lease it, and there's an opportunity there. Mm-hmm. Also, I look up to other people on YouTube. There are other investors who've done very well with this. So some of your viewers might look up Manny Koshbin, see what he's done. Ben Mala is also in the hotel space and more of the commercial space. He's actually buying triple net leases now. So he bought a building with a Home Depot in it. So there are always transitions to be made, and as long as you have your cash flow right and you're ready to take on more risk, it makes sense to look at other plans and look at other business profiles and I don't want to use the term diversify. I don't think this is something that allows you to make more safe bets just because you have more types, but it's risk that you can bite off in a measurable way.
Gotcha. So you mentioned triple net leases, so we'll talk about that in a sec, but overall, what are the differences between the buildings you've been buying today and kind of the buildings you're looking at now? Obviously, we have different terms for our tenants, like triple net leases. Do you mind breaking down for the audience a bit?
Sure. Well, in short, a triple net lease basically means that the tenant pays for everything. So they pay the property taxes. They are also responsible if things go wrong maintenance-wise. So if they were to have a roof leak, they don't call you. It's the most simple, low management option, and cap rates suffer, so you make less money unless you are able to go in and turn around a property, right? But unless it's a real flip or a real positioning, cap rate's going to be lower and the cash flow is going to be lower. But that's an option. We don't do many of those at this time, and I'm not sure we will be doing them for quite some time. Again, I'm still a very active investor, and we want to take on projects where there's value add.
Yep.
I suppose if you're going to be value add focused, triple net leases or buildings that have existing triple net leases might be the last thing that you look at. But it doesn't mean you won't look at them. It just means that you'll look at them down the road as you're completing your overall profile.
Yeah, and what other differences are there? I'm assuming that kind of your due diligence period takes a lot longer than, say, if you're buying just, you know, a 6-plex or an 8-plex.
It does. It depends what you're contrasting. So in terms of residential versus entirely commercial buildings with triple net leases, it's entirely different. Your lenders are different. You are qualifying based on the attributes of the property. The bank doesn't scrutinize you and whether or not you have a job. It's entirely building based. So in our business, we're in a place right now where we have commercial tenants, we have commercial momentum, but we're not at the point where we're doing those triple net leases, and we're also not at the point where we're dealing with national tenants. So that's another conversation that you'd go over if you were considering getting into this. What sort of tenant profile do you have? Are you leasing to tenants that your lenders are already familiar with? Are you leasing to tenants that are franchises or chains? Are they mom and pop stores? Do they have one location? So in our business right now, we're at a point where we're renting to small businesses. A lot of them are only operating in the communities that our buildings are in, so they're not operating province-wide, statewide, anything like that. And so there's more flexibility for the tenant in terms of the real estate that's at the size where we're operating. So there's also a discussion we had about TMI, taxes, maintenance, and insurance. Do tenants pay that? So our answer in our business right now is sometimes. So different leases have different things that are included and excluded, and it's hard to determine all the different categories, but I think as people become larger and the portfolio size goes from millions to tens of millions to hundreds of millions, they have more standardization at things that they break out, right? So at our point in this business, we're not always breaking out TMI. We're not always asking for triple net leases. There are some people that have inclusive leases. I mean, based on the hydrometer situation, we have one commercial tenancy where it's all inclusive.
Oh, interesting.
Which is perhaps the opposite of what you want, but it's the right thing to do for a property that size with a rent that amount. Yeah, paid for by a business owner whose business is a certain size. So it flexes and changes as you go up the ladder.
Yeah, and so one of the things I'd love to talk about as well is risk. So I've heard from both sides of the spectrum, from both active investors as well as just like commenters or followers of mine. Some people have the impression that moving into the category of buildings you're talking about, whether it be shopping malls, office buildings, or retail plazas, that they're higher risk or lower risk, that residential is higher risk or lower risk. Kind of what's your opinion, and overall, is there a general rule of thumb that people can expect?
Well, the short answer, in my opinion, is that it's something that you're going to have to manage, and it's risk that you can bite off in reasonable chunks as you're ready, as you grow, presumably as you have other investments with existing momentum that can pay for some of the risks and pay for some of the things as they go bad. People have a variety of different opinions. again, I think it makes sense to do things over time, build on existing momentum, bite off some risk as you can afford it. If you get burned, you pay for it, but then you're ready to level up again because you didn't bankrupt yourself. Sizable growth so that you can manage potentially the mistakes that are also of a limited size. When people say, oh, it's risky, yeah, if you take all your cash and you put it in one building and the building doesn't lease, that's a big problem.
Yeah.
You shouldn't do that. At the same time, I just think that it works well with other types of real estate in the mix. Multifamily has risks. I've been extremely successful managing multifamily risks. There are thousands of horror stories all across the internet. They don't happen to me. And when they do happen to me, they're limited in scope, they're one-time events, they're events where we have the cash to cover them. So people also say multifamily is dangerous. It comes down to whether or not you've done the research and whether or not you have the expertise to manage the risks. And again, like any investment, you really do get to select your risks.
Yeah. So let's talk about the differences, at least here in Ontario, Canada, between the tenancies. So dealing with a residential tenant versus, say, a retail plaza tenant or an office unit tenant.
Well, the most simple, concise way to explain what the difference is that in Ontario, residential tenancies are quite regulated. So just about all of the mechanics of the tenancy are laid out in the Act. So there's little room for creativity. Everything follows existing systems. In the commercial space, there are laws to follow, but you really don't have to follow any one system if you don't want to. You don't have to do triple net leases. You don't have to do inclusive leases. It's understood that the parties that are working together, landlords and tenants, are more sophisticated, not necessarily vulnerable the way residential tenants could be in certain cases. And so you get to negotiate what works for you.
So where do you go to find these deals? Like, are you going to an MLS that just has all the shopping plazas, retail plazas, and office buildings? Is it more relationship driven? Where are you turning to find these opportunities, and where would you recommend viewers turn if they want to move into these class of buildings?
Again, our growth has been somewhat organic, so we found buildings based on relationships we've had or people that we got to know years before there was a building available to purchase.
Yeah.
There are buildings listed on realtor.ca. Again, people say with residential, perhaps not all the deals are listed. With commercial, I think it's even more so. If you're looking at certain asset classes, if you consider all the real estate asset classes there are, and then you go to realtor.ca, you'll notice that a portion of the asset classes are missing. So there are some things that happen almost exclusively off of realtor.ca or off of MLS. There are brokers who specialize in it. I like to look at JLL from time to time. They have a good number of properties all over Ontario. It's something you also have to talk to brokers about, and I suspect that a lot of this happens with brokers who are busy over lunch, who are busy just connecting the dots rather than spending time updating their website.
Yeah, and so even the type of brokers you're dealing with are different than residential, right? Like, you're probably less likely to go to a Remax or Royal LePage and more likely to go to like CBRE, is it Colliers, and Wakeman Cushfield?
Exactly, yes. I've bought mixed-use property from the, not going to say residential agents, though I suppose some of them were actually residential. Some of them have their commercial designation, but they're still spending most of their effort selling houses, right? So I've bought through them. They are generally less helpful. I don't mean to be too critical, but people without commercial experience generally find themselves less able to help you in a commercial transaction. It's pretty straightforward. So even if someone works at one of the prominent residential brokerages that you're familiar with, if they have commercial experience and they're able to talk the talk and they know the terms, then you can work with them. I've had a few of those. But the farther up the chain you go, the more you want to work with a commercial broker.
Yeah, makes sense to me. So I know one of the things people love to do is get very tactical in these videos. So what sort of like cap rates are you looking at or seeing these days in Ontario, Canada? And if you don't mind sharing, like, what's a cap rate that would get you excited? Or if it's not just merely a cap rate, but like, after I do my value add play, it's going to be at this.
Right. Well, again, there's been cap rate compression across the board, and commercial certainly isn't immune. In certain cases, the commercial cap rate compression has been worse. So you don't typically see duplexes and triplexes that are positioned as complete redevelopment opportunities. Maybe fix and flips. But then when you look at bigger buildings, there'll be buildings that are available for 3 caps or 2 caps. And instead of being positioned by the broker as a sustainable ongoing investment, they'll be pitched purely as a development opportunity where you get to come in, knock a building over, start from scratch, but at least you get paid to wait. So their position isn't that a 2 cap or 3 cap is bad. Their position is that a 0 cap would be acceptable because you're buying a property that you intend to make vacant and start again, and at least you get paid. So you see that. It's incredible cap rate compression. Some of those people could have bought the buildings at 8 caps, and now they're trying to sell for, much, much lower than that.
Yeah.
I've always liked 10 caps for my entire career. It used to be easier to get them. It used to be, just right at the beginning of my career, it was possible to get them on residential only.
Yeah.
So I appreciate that that's not necessarily in the cards for people, but at the same time, it all depends on what your plans are for the building and if you have a reasonable repositioning opportunity to get you there. So in a sense, what you buy it for in terms of your cap rate is to a degree immaterial as long as you have a plan. You can buy 5s, you just don't really want to have it continue to be a 5.
Yeah, maintain it at that level.
Exactly. And if you choose to buy a 5, you could still do very well, but you're going to have to watch your financing and you're going to have to put a lot down because you can't afford to borrow more money and still make your debt coverage.
Yeah, and so because you brought up financing and down payments, I know there's going to be a ton of questions now. What's a down payment normally like in this space, or can you give us a range? And like, what sort of interest rates do you normally see for these type of projects, at least you're looking at?
So on our mixed use or commercial only buildings, you typically get offers around 65% loan to value. There are exceptions. There are other, you can operate a little bit outside of the standard plan if you're able to connect with someone who allows you to. So I've definitely had lenders that gave us more beneficial terms. But generally speaking, you're putting 35% down, 65% loan to value. The interest rate could be a couple of percentages higher than what you're used to. If you're going to a bank and you're used to getting 3% or that sort of range, then that's not really happening. Even your best lenders, right now, A lenders are still doing high 4s for some of these properties in our experience. And then sometimes to get a deal done, you have to go to 5, you have to go to 6. If you're repositioning it and it's not where it's supposed to be, it's not where the lender wants to see it, you might end up paying a little more until you get that fixed. But that's what we're seeing. And then as you go farther up the chain, again, some of these institutional investors or people who kind of are getting close to that or aspiring to get there, they're going out and they're getting very, very large mortgages that might not be at a high loan to value, but then they're still able to get very reasonable interest rates that allow them to pay for the low caps. So if your money is at 4 point something, buying a 5 cap would be very, very narrow margins, right? But if you're really that large and you're able to negotiate or you have a lender you have an existing relationship with and you're able to get it for 3 something, then maybe you can get a 5 cap, get a 5.5 cap, and then work with it for a couple of years until your spread widens a little bit.
Makes sense. So in previous videos, we've talked with you about vendor take-back mortgages, and that you did a lot of those throughout your real estate investing career to build and amass the portfolio you currently have. Are vendor take-back mortgages common in this space as well, or what's your opinion or experience?
Well, I don't think that everyone's going to agree on this, so if someone disagrees with me, that's okay. I feel they're incredibly common. Some people do, in this space, some people do VTBs on every single deal. I know one investor whose policy was to ask for a VTB, to throw in a VTB, just because it would juice the deal a little bit. So they understood that they were going into the market and basically paying market prices, and they disliked that somewhat. So their policy was that since they were going to be throwing out a wide range of offers to the general marketplace anyway, why not throw them all out with a VTB and then only go ahead and firm up and close on the ones that agreed to a VTB. So that allowed him to boost his margins just a little bit so that he had more room to work. So again, people are going to disagree with me. I think it's incredibly common. You have to remember, everyone's sophisticated. So in terms of contrasting this with residential, maybe you're worried about talking to a duplex owner who hasn't heard of a VTB, or maybe their agent has told them that only people with no money who can't afford to close would even ask for a VTB. That's totally different. So I expect, whether we ask for a VTB or whether we settle on one or not, I expect every commercial vendor to be familiar because
Yeah.
they've been in the industry. They're supposed to know.
And so because there's familiarity there, it's at least easier to have that conversation, get started, and see whether there's potential.
Absolutely. And if you're nervous about offering in the multifamily space, let's say, you're worried about getting an emotional reaction, I expect no emotional reactions. So if they throw a tantrum, just don't talk to them again. It doesn't matter.
Yeah.
If you feel some temptation to take it personally, if a discussion about VTBs in another space goes awry, don't let it affect you in any way, even slightly personally, when everyone's supposed to be sophisticated. So if someone throws a tantrum, walk away. It means nothing.
Yeah.
We have expectations for how people act once they're rich and once they're experts.
Yeah, I love that. That's great advice. So let's kind of talk more on a macro level now. When we're looking at, shopping plazas, retail plazas, or office space, what are your concerns about things like Amazon, Amazon Prime delivering stuff, or a lot of people moving or transitioning to, telecommuting or working from home? Do you think is that a major concern? Is that something you think about when you're looking at these buildings? And if so, what designates like a good building or a building that you think has longevity behind it?
Well, that's a great question. That is the number one concern. So it's something that you'll need to spend a lot of time on. It's something that you'll need to dig through. Though, I'd just like everyone to keep in mind that the future is selling less of more. People would say electric cars are here, the internal combustion engine is dead. Not quite. People still make money selling internal combustion engines. So again, it's going to be a transition. And even in the last 2 years, 3, 4 years, I think it's become clear to everybody what the transition is going to look like. I know I've seen some interesting things in the market, and some things that a couple years ago were theories to me, I've now seen people bring to fruition, and so I think we have more clarity on it than we used to, because we all used to be very afraid that Amazon was going to end commercial, but of course that's not the case. So we've seen in the grocery store space, where I have no play at all, I don't want anyone to think that I'm a grocery space expert by any means, but in that space, we've seen businesses continue to hold on to the space that they have and use it more effectively. So what used to be solely floor space, even if it continues to be floor space where customers are permitted to walk, and even if it doesn't look that different, it's beginning to function more like warehouse space. So you have a retail/warehouse combination, and you have things like click and collect, where customers are driving up in their cars, but the sales are being made. There's a drive to have higher sales per square foot, so the business that you're leasing to, they need to get more done with the real estate they have, but that's just the way of the world. We've always tried to get more done. At one point, we were using carriages instead of automobiles. So it's nothing new that people are trying to get more done with what they have. They're trying to make better use of what they're paying for. They're trying to, eliminate problems and take advantage of efficiencies. In shopping malls and big spaces like that, there have been a number of changes. I think people have seen in certain parts of the US, there have been malls here and there that have just been finished, and so that scares people off. But I'm aware of residential conversions. Pads are still doing well. So even if in the dead center of the mall, they're having trouble attracting national tenants or high quality tenants because the foot traffic isn't where it's supposed to be, you still have freestanding buildings in the parking lot called pads. You can have a drive-through bank, you can have a restaurant chain. There are a number of things happening there. Starbucks has pads all over the place. So there's just a transition, and there's also more office space. I see more, I talk about commercial tenants, even the government, even the province of Ontario and Canada, they're taking office space in these buildings where they used to be in dedicated office buildings, and now they are trying to appeal more to Ontarians and Canadians by being a little closer to where they shop and live and play, rather than being off in some industrial park or office area. So again, there's just, the future is selling less of more. So maybe you, in one decade or another, you hope to sell exclusively retail space within your mall. Now you're selling retail space, office space, maybe some residential space, and maybe you're servicing people who aren't getting out of their cars. But that doesn't mean it's less workable. It just means there's more to consider, and that you need to evolve as the industry evolves.
Yeah, it's a really interesting space right now, in my opinion, because we see all these operators experimenting, right? So one thing that I've noticed that's really common now is like satellite college campuses opening up in kind of like dying malls, as well as like and here in London, Ontario specifically, we've had like libraries and stuff opening up in malls. A lot of Service Ontario locations are moving towards, like you said, the retail plazas or malls as well. And even now they're starting to like sometimes intensify the site where they're like building towers, right, for residential to try and create more internal demand for literally what's already available for the commercial space. I think it's going to be really interesting to see the next 5 to 10 years how this space continues to evolve and the operators continue to experiment to see what's going to click long term and what's more a short term fad. We're also seeing a lot of malls now move towards experience oriented things as well, right? Where they want to have bars, they want to have arcades, they want to have mini putts. Like a lot of the things that malls used to have 20, 30 years ago seem to all of a sudden be coming back in vogue just because they really want bodies there.
Exactly, yes. Well, if you could bring residents to the property or adjacent to the property to live, I mean, that's the best way to get them engaged in everything that you have to offer right in that neighborhood, right? Or right on that block. But yeah, again, I don't think there's anything wrong with testing. And I think that people get concerned when they can't check every single box.
Yeah.
Right? What exactly is this going to look like? But again, as you scale up your business and you try to grow, there's nothing wrong with testing. There's nothing wrong with adapting and seeing what works, and you get a return anyhow. And you get a return as you go. Testing doesn't mean losing until the hopeful win at the end. It's just part of the game. It's part of any business, really.
Love it. Awesome. Thanks, Jon.
Thanks.
Thanks again to Jon Kepler. If you guys want to see more Jon Kepler, check out this playlist. If you want more Matt McKeever, check out this playlist. Otherwise, have you checked out Cashflow Tribe yet? That's the new company, the new community, just the new resource I'm making available for Canadian investors. Check us out, cashflowtribecanada.com.
Cashflow Tribe. Huh.